Hey friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, quick stock market analysis show where we have the analysis of technical charts daily, and we'll try to understand what happened in the market during the day, and then plan for a better trade for the next day. That's for April 23rd, tomorrow, Tuesday, 2024. So we have a positive close, both indices close with a decent enough gain, closer to 1% or something. But the question is, are we going to sustain this recovery that started on Friday with a big bounce up? We'll try to find the answers from the charts. First, let's get into the charts and see the plain candlesticks first. There's a Nifty chart that you see here. That's a hammer. Look at the big size, and the hammer is close comfortably above the 20 exponential moving average. That's bullish. And that too with a gap up, so the gap will give another cushion on the downside. Remember, we had made nearly 5% of correction, and we have bounced up on Friday with a piercing candle bullish pattern, and as a continuation today we have a gap up. Gap up is always showing the power of the pulse. And if you look at the candles where it is placed, it had gone to the bottom of the trendline channel, now heading back to the top of that towards the all-time high. Once again, we are just 700 points, 500 points away, not even 500, 450 points away from the all-time highs. Looking at the Banknifty, the candlestick formed is a doji. Doji is indecisive, and this is kind of this looks like a doji of dragonfly. Anyway, it's a doji is indecisive. So every doji would have a very small body and a long wick size. So that indicate the big size indicate the support, that is the bounce up that took place during the price action during the day, and then finally ending up with an indecisive close. This is basically this indecisive doji. Dragonflies are kind of bearish in nature, but only if it is confirmed to have a price move that close below the today's candle's low, and it's mostly effective only if it's in the top of a trend. Here it's not in the top of a trend, right? It's somewhere in the midway, so we can probably ignore that. But this indecisiveness could indicate a pause, a temporary resistance at right above. That way you can make it out. But otherwise, look at the Friday's candle. It's absolute piercing wide rich bullish candle, and if you see where the price is, it had hit exactly the bottom of the trendline channel, and once again heading back to the top of that. Good decent recovery, but remember we have a gap resistance that's quite strong right up there at 48,500 nearby. Same with Nifty, also we have a gap at 22,500 zone. So the good thing is that Banknifty also claimed back the 20 exponential moving average, which it had lost. Same with Nifty. So that's where it is. If let's look at the support resistances, we can clearly see that the first resistance will be 22,500. Give a gap, and after that 22,775, which is the all-time highs, right? So the first question tomorrow is, will it be able to clear the 22,500 and close above it or not? Downside, the gap that is formed today at 22,180 would be the support one, and then you have 22,112, which is the 50 exponential moving average. That can be a support. And after that, 21,857 would be the Fibonacci 23 retracement support, and then it can find supports at 22,000 rounding number, and then 21,640 is where the 100 exponential moving average support will come. Right? So looking at Banknifty similarly, first resistance will be 48,500, and after that it will be all-time high at 49,057. We have the 48,000 that's there before that, and the 49 also that comes in as not big rounding number resistance. So tomorrow the first hurdle will be 48,000, clearing that, and then 48,500 clearing gap. That will be the resistance that may face it moves up. Downside, the first support will come in at 47,670, which is the 20 exponential moving average, and then 47,000 big rounding number, and 47,200 supports at 50 exponential moving average also will come in handy. And if it goes further down, 47,000 also is breached, then it can find support at 46,650, which is going to 100 exponential moving average support. Also 47,500 has got a Fibonacci 23 retracement support as well, if in case it goes below the 20 exponential moving average once again, right? Those are support resistance levels for the Nifty. Let's get back here and see a wrap up. So it was 0.86%, less than 200 points, 189 points up, still close. Continuation gap up of previous Friday's big bounce up from the retracement. So Nifty has also gapped down and gained 350 points. That's 0.74%, and both of them have closed about the 20 exponential moving average, and it's closed at 47,925 and 22,336 on Nifty. So it's nearly 5% of retracement, and 8.5% retracement is the highest retracement that has happened so far on both the indices, and that's where we are set up. We've seen the upper resistance levels. Intraday it was gap up and then it went range bound, but the last 1 hour there was a big spike on both indices. That's where Nifty gained little more than the Banknifty probably in the last 1 hour's breakout, but otherwise it was range bound after the initial gap up. So that was a strong indices, positive close that we can summarize it to. So we just put it into 2 buckets of the bulls and the bears. You can see what goes in the bulls. Yeah, 50% of retracement recovered in just 2 days, and the retracement of for 6 days. Higher high, higher low. That is very quick recovery. Higher low patterns remains intact. 20 exponential moving average is reclaimed. Bollinger Bands are in contraction mode and not in expansion on the downside. And let's go a bullish bias as well, both indices. So potential sideways moves and not bearish moves can be expected here. Sectoral indices have close green. Momentum is maintaining either bullishness or sideways. Almost all the major sectoral indices except for the IT, which is falling the sideways on the short term. IT is falling with the bearish zones actually slightly. Otherwise, it's all positive there, right? Heavyweight stocks are all close green today, just like the sectoral indices. And the HFC Bank was the only exception of a small dip. So momentum is maintained in the sideways on all of the major heavyweights convert maximum to the indices, but except for the INFI, is a IT stock which is going to be bear zone, so it's not recorded yet. Open interest analysis, if you see BCR is greater than one of both indices, which is bullish. Future SOI is having a long build up today. That way also it's bullish so far, but we have a monthly expiry that can be too volatile, and then that's coming only on Thursday. Couple of days more than that. It's a cool off once again, and that would only have a 6% of cool off happened. It is now into 12.3 from the 13.5 kind of levels earlier when the market had made a dip. So that's also positive in favor of the bulls. Now the bears, the momentum is not as bullish about that as I6. It's still in the sideways and struggling to get up. Trend has crossed over earlier to the bear zones and still not gone back to the bulls, to the positive zones yet. Is that to happen? So keep that in mind. And it's a small indice candlestick on the Banknifty. Indice is always dangerous, right? So that means some resistance, some resistance, some pause before something, right? So that way you have to be cautious. That's false. Therefore, it goes in favor of the bears. US indices had fallen drastically. 6 to 8% of fall from the top has happened on Nasdaq, S&P 500 and Dow Jones indices. If you see, so there could be potential more retracements that can come in. So in some other markets, you'll be cautious about that fact. Some green has come in the last day on the Dow Jones, but The fact is it had done some nose diving from the top of the rally. Remember, US market is also having big rally like ours since quite long. That's where our recent rally started. The dollar index is also showing some green with 106 point plus 2. Dollar is spiking and rupee remains weak at 83 plus, being managed by central banks. So a weak rupee and the dollar spiking is struggle. Crude oil has cooled off 8% from the top after it started to spike following the war news flow that came in, but still it's at its high levels at the top of the trend line channel at 81.3. So be cautious about the factor, and therefore it falls in the bucket of the bears. Gold was showing some red 4% retracement cool off from the top, but it has been breaking out and then it's still very close to the all-time high. So that gives it doubt that its money is getting shifted from its equity to the safer hands like commodities like gold. So that's a worry for the equity market. FIs were big time sellers. Today's data is not coming, but for the last several weeks there had been big time sellers of 10,000 plus crores kind of selling happened last week. So domestic institutions are compensating and buying, mutual fund money is flowing in, and then that's what is keeping the market up. But foreign institutional money also has to come in for the market to further move to those 25,000 kind of levels. So that's what is lacking. Probably that is waiting for the Fed rate cuts and things like that. We want it for the next day. Today was as you can say, market showed the strength and then managed to sustain the bounce up of Friday, and managed to recover half of the gains in 2 days. 6 days of all retained in 2 days is showing the market strength and reclaimed 20 exponential moving average easily. But the Banknifty closes in this doji is something is a very point, and both the banks is showing consolidation than a bullish expansion. That is yet to happen. Higher light pattern is intact as of now, even though we had a big retracement due to global cues last week. So that remains intact, is positive. But as of now, if you look, it's kind of short-term consolidation that's happening. So for investors, dips like this will be options to invest in SIP more and long-term quality stocks investment. For traders, you just need directional moves, and that does not happen. That happens only when the momentum moves above the RSI 60 or below the RSI 40. So that has not happened. Till then, short-term consolidation, and you just have to play the non-directional or spreads if you are into options. So manageable risk is all that we can do. Right? VIX is spiked up a little bit because of the recent retracement, and still not gone as far as the 15 plus or 20. So there is still some juice left for the non-directional traders, options traders, etc. But we have a Fed meeting coming May 1. Outcome earnings results started coming in the review for the next few days. Middle East crisis still not really cooled off fully. Election exit poll results and outcomes all will make the market jittery anytime. Let's go up all the support resistance levels. Major event outcomes comes. So I'll be cautious with tight stop loss until all this just gets out of the market. So I'll be slightly careful, cautious on either side. As of now, market is consolidating. Basically, the market view is neutral. Slight bullish bias because of the strength that is shown in the recovery after the global cues went bad earlier last week. So that's my view. So manage your stop losses, portfolio level risk management, stop losses and hedging strategies, covering your risk and all these things that could be done. Rest is with the markets to decide. Right? Thanks for watching. Happy trading, happy learning. Bye bye.